Hello everyone, welcome to another weekly market review. Today is the 30th of March 2020. The market has been slowly losing volatility. Nonetheless, range plays are there and opportunities are to be had. Let's get right into it. Here's the total market cap chart. I'm on the monthly time frame because we have the monthly close pretty soon. Generally, I don't like to look at the monthly close because close to the end of the month, there's a lot of price action that changes the analysis. So it's better possibly the last day or a day before that. You can still, we're making the review on the 30th, so it makes sense for me. And what I wanted to show you on the total market cap chart, this is the monthly block basically that led to the high of the previous market cycle in 2018, the actual high, the December 2017 high or the January high, whatever you want to call it. And what we did is we broke down below it, built a spring, and we have come down and retested it. So this month is going to close above it, which I think is very positive. Let's go down to the weekly. So the weekly time frame, I'm just going to put off this monthly support. So the weekly, last week what I had brought to your attention was that this weekly support on the total market cap, it was holding, and this week again we have held this pretty well. And what I want to tell you guys, I have told you this many times before, the total market cap and the altcoin market cap charts, they are key to truly understanding what's going on in this market. That's why I chart them before anything else. I think most of the people, they think crypto is Bitcoin, and they do not notice the subtle signals that these charts can provide. But anyway, we have held and reclaimed this weekly level for a second week in a row, which I think is very, very positive. The general theme has been that loss in volatility that I was talking to you about. This absolute loss in volatility ends up giving some moves. I had recommended to be able to build this range and have a range play. You can see we had a nice top run a couple of days ago, or 3 or 4 days ago, and it was a good short opportunity. I did take this short. Currently I have taken a small long because I'm looking for this level to hold. I think this retest over here kind of got front run. We might be building something like this, which is a nice shape. It's a very nice shock wave, and I basically took this long last night. I took BCH and BSV, and we've had this impulse. But anyway, this is again lower time frame plays, guys, because what had to happen, I had spot buys here. We did call longs all the way up from here, and last week I was calling for caution, but we did not get a confirmation of this breakdown from here. And since we did not, we made a nice retest to the top of this range and the 2020 yearly open. We have gotten a reaction from it. Currently we're bouncing. It is possible that we do end up bouncing right back up here, but be prepared for periods of longer sideways, guys, because if this is a consolidation, that's what price does, and I feel that everybody is waiting for that premium. What I do want to bring to your notice, I want to tell you, is that drop that happened on the 12th and 13th, which was primarily driven by a lot of BitMEX liquidations, guys. And you have to understand that as soon as BitMEX switched off, there was a huge surge in demand. Alright, it was not small, it was a huge surge in demand. We had a good 30-40% move up, though we did make that second correction. Congrats, you were watching the weekly review, because we caught the bottom of the altcoin market cap, but basically caught BTC as well. I called that on Twitter. And this was the buy, guys. Like, if you had been waiting, I know a lot of people are waiting for price to get back down to this zone, but do remember that drop was caused by an anomaly, and we have basically moved away from that, and we are consolidating above it. It is still possible that we do end up getting something that takes out everybody in this entire zone. You know, I think that is still a probability. And but the thing is, if this is the bottom, guys, it is also a probability that we do not test these lows again. We may come back down and take out everybody who has stops below here, you know but all the way back down, and people who are looking for low 3Ks and on BTC, they have to understand that this was an anomaly. They have to understand that when BitMEX switched on their liquidation, their engine again, so somebody in this zone, they bought up all the liquidations. They decided that they moved their funds there, and they decided how much ever comes, we're just going to buy it. So please just remember that before you're thinking that price has to get here. Know that there was somebody willing to put in as much money as possible to buy. So I think that is the reason that we moved out of the zone pretty quickly, and we have been consolidating above it. For me, it has just been, my strategy has just been to hedge up here and then allow the market. I mean, you have to pay a little bit on the shorts, but I am still day trading when we do end up getting good moves, and being able to cover that premium I'm paying for holding my hedges. But apart from that, for me, this is still just looking like consolidation. The shape of price looks a bit high, so I think people are quite afraid to be able to buy here. So I would suggest that, you don't need to really be in a market when it's like this. You can be trading it on lower time frames, or if you're an investor, then you have to think of a different strategy. Maybe you have to dollar cost average or do something. But for now, yeah, just play the lower time frames, guys, and if you can use lower time frame strategies. This was just a simple trend line retest, but there are a few ways to be able to play this, and this loss of volatility should persist. If this is what has to carry on in crypto, this will be the theme going forward. So just a quick look at the altcoin market cap fractal. We played this from the, essentially this is about where I drew this fractal, in July. So we played this to the way down, then the way up, and all the way back down to the bottom of this. We did make a slight move lower, but currently we are building this consolidation, guys. So we are in this period of consolidation, which is right here, and you have basically a nice place to manage risk, even if you are looking at something long term. Essentially we don't need to have a move like this. This is when the market was a completely different, and it had different players and not much derivative and Wall Street exposure. So you don't need to expect gains and volatility like this. But what I'm saying is, for a higher time frame, this is actually just a consolidation pattern. We came up from here. Even though there isn't more history, but we moved up from here in this market from a move below. This was basically 2015, 2016. So now we've had 2019, 2020. So another couple of years we've had of holding a key level, and I would say that until we hold this, anybody calling for levels lower, they're just out of the market, guys. You have shorter time frames to be able to manage your risk. You have better strategies than to be able to guessing and thinking that price has to go a certain way. For now, all it is a consolidation until proven otherwise. It's a consolidation at a long-term market bottom. That is what the probability is, and that is what a higher probability is right now. And this probability gets negated if the levels that we are at, they get taken out. So you have basically because of the spike, it looks really deep, and that's why I think people are trying to wait for price to go a bit lower. But if you actually manage price from the monthly level or the consolidation that we are having, I mean, you can still manage your risk, you know. But it is possible, guys. I just wanted to quickly show this fractal for this. We're breaking in and out of the channel here, though what you can see is the 2019 2020, this yearly open support. I think this is key, very very key. And so is this weekly block, which I have plotted out over here. But essentially you can see that this is now kind of looking like a bit of an anomaly, you know. And this is really, to me, it's looking like just what happened for that moment in time. And these levels, this 2019 yearly open levels, the levels that we did hold and printed the bottom for the last low in December, these seem to be the ones that are a nice place to be managing your risk from, you know. So considering this is a consolidation pattern, I would say that we are still building out something, you know, over here. And maybe it takes some time to build that out, but we have possibly another 15 to 20 days of this kind of consolidation, you know. And that's when things will get interesting, because the halving is only about 30-40 days away, you know. So that's when things will get interesting. But still, guys, I think these are nice places to be managing risk. Price is going to, even if we go sideways, break out of this channel. For me, as long as we are again moving out of this channel and holding these support levels, there is not much for me to be looking for a deeper downside. Again, I have told you my strategy. At higher levels, I'm looking to manage my risk. Total market cap is showing that a bit better, but higher levels, I'm looking to manage my risk for downside by hedging. But I am interested in accumulating at these lower levels, because it is what it is, guys. There's a lot of things that point to possible consolidation, and I will play that until it's negated. Here's a quick look at alts against BTC. And last week I built out this range for you. I think it was, yeah, this is around where we were when I built out this range. So we tested it very nicely and made a nice 5% move from here. And while BTC was moving, so alts moved faster, you know. So but essentially, let's just look at a higher time frame right here. So what I did mention was that if we are in this phase, it is possible, first of all, that the shape of these lows is different, you know. But we can still go back, test the top of this range, drop back down. But till the halving and possibly a little bit after, it's more about BTC, guys. And BTC has better liquidity and similar kind of volatility. I mean, apart from BCH and BSV, because we have the forks in the next couple of weeks, which I think should bring some kind of volatility. I mean, Bitcoin is great to be trading, whatever it is. It's showing pretty clear directionality and moving better than a lot of alts. So I'm still expecting this to range for a bit, but you know, you can, no matter how slow the range is, if you can identify key levels, you can always expect a reaction from them. So here's Bitcoin. I've started with the quarterly chart because we're going to be closing the quarterly as well. So I think the key level for the quarterly was, first of all, this 6600 level, which there is a very decent probability we're going to close under. And the other next key level were basically the set of lows, which are clearer on the weekly, so I would not get into it. But the quarterly chart closing under 6600, it suggests that, I mean, this is not clearly ready to reverse at this very moment, because I would say if the quarterly had closed above the 6600 level, this would be really, really bullish, guys. Like, this would be a heck of a candle. It already is. I mean, this is so unique. This is possibly never happened in Bitcoin's life. Not possibly, it has not happened in Bitcoin's life. But this is what the quarterly chart suggests. The monthly, again, this monthly block, we have way above this, a good 20% above this. But what is more clear is the weekly, because this is the level I had highlighted since a long time. And last week we were looking for a bit of a downside, because I did show you we closed below it. And this week, even after having a big run up and taking these highs out, we have closed the weekly above this 58.46 level, which is quite a key reclaim for me. And let's just quickly go down to the daily, and the daily time frame as well. We're holding that 58.46 level pretty well. But what I would say is that if we are going to consolidate here, before we have to move out of this range, I would at least expect all of this to be taken out, these equal lows to be taken out, possibly drop down to low 5Ks, and I would expect this 5K support essentially to hold. So, but it is not a guarantee, that we have to come all the way down here. These are just important levels where we can find reactions. And I would say that if we are spending a month or two here, you've known any past BTC consolidations, there's no free lunch. If people are building overly aggressive positions over here, even if they're long, I would expect price to at least come back down and take them out. These lows for BTC, these 5600 lows, they seem like the most attractive to me, for liquidity. I don't know if we have to come lower. I think this 4400 range is a bit out of reach. We can think about that if 5K is taken out, but for now I think this is the attractive lows. So if BTC is to say do something like this and we have to consolidate and take out lows, for me a nice impulse can be had if we simply just take this out. I don't know if this is how much time we need. Maybe we need less time, maybe more. Considering the halving, it is possible that a shape like this is done by even mid-April. But I would at least expect these lows to be taken out. But nonetheless, I am holding my buys from here. I am still hedging up here at these levels. And like I did say last time, just quickly go on a little bit of a higher time frame. Until we reclaim this 6900 level, there is no big confirmation of upside, guys. But this is pretty positive. I mean, what we've done here, I think people are still overly bearish. Yes, we did not get that V bottom recovery. A lot of people will look. I think that is negated, and I think that was negated even last week with the weekly close. Another thing I quickly want to show you is the funding, guys. So what you can see is we're having a longish period of negative funding right here, right? This is also basically the futures premium, which showing we are in backwardation. So you can see the last few times that we have done this. Let's color this purple. All right, just look at the last few times we've had longer periods of this negative impact that BTC has had. Yes, this is something you have to be careful about, but even here when we did have it, this was very long period of negative funding. But basically I'm talking from since the 2018 bottom, and every time we had this longish period of negative funding, there is one difference over here that I will come to, and why I'm not highlighting it, because see, nothing should be used on its own individually. Even these indicators, you need to use them in confluence with something. And what confluence do we have over here? we had negative funding right here, negative funding right here. So what confluence do we have with these three zones and what we are doing right now? So we have this period of extreme negative funding going on, and this can last possibly another month or to whatever period we do have to consolidate, right? And the other thing we have is this: we have this super bearish sentiment. 70% of the people do not think BTC has bottomed, and even the rest of these 30%, I would say about 25% of them are hoping for some bids to get filled. Maybe another flush out of everything. They're hoping for something to get filled here, and this is what bottoms are made out of, guys. It is a probability. I mean, it adds to it. It is not definite. Again, I keep telling you, in trading there are no definites. They are only probabilities. But something like this, these are things that add to it. Extreme negative sentiment, extreme negative funding. Futures premiums are at an extreme in backwardation. So all of that is happening, and price is still proving itself to hold. We're making big stop runs. Let me go to a lower time frame. Let's go to the hourly here. All right, 1 second. Yeah, so we go to the hourly. This was a nice stop run right here. So if we are overly bearish, it should give a big move, considering the volatility. What did we get? We got a 5-6% move. Price still held up, right? We did end up coming down, but the kind of volatility everybody's expecting. Again, guys, I will tell you, this zone was bought up pretty quick. Right here, this was the zone that was bought up really quick, and I highlighted this on my Slack, and you can see when price came down, we defended this zone. This was the zone where somebody bought in all the liquidations that were there on offer on BitMEX. What did we do? We came right down, tested the same zone, it was bought right back up. So I mean, if you're thinking we have to go back down there, I don't think it is for now a big yes. Yes, if we take out this level, I definitely want to manage my risk from here. I want to play with the big money, but until then, price is holding up, guys, and sentiment is wrecked. Everything is wrecked. Funding is against it. What I would say is the open interest and price is dropping. Shorts are still opening. Shorts are still very aggressive on this move. So they're paying the longs, and they're still being overly aggressive. So I would say you be careful if you also being overly bearish. Right here, the total market cap, altcoin market, everything is showing us for now that we have a support that is forming, and for now that is holding. So what do, you should be looking to manage your risk from that strong support. You should be looking to find where that big money is and to be able to play along with them. You don't need to guess and decide what the market is, but you need to watch the signs and know which way it is probable that the bigger money is betting, and go with it. So for the traditional markets, we do not need an overt and overly long drawn explanation. I think, again, just like crypto, we are partially losing volatility, and that's about it that's going on for us right now. But what you can see is that this is what we have. This is all the previous 20% plus declines, in this market. And for any market, I strongly feel this is a very good way to study markets. We don't have too much history in crypto, so that's why it's not so possible to do that. But you can see with the altcoin market fractal that it is possible to successfully map out previous consolidations, even if we haven't had so many of them before. But you can see 1, 2, 3, 4, 5, 6, 7, 8 previous times that the market has dropped to potential where it has, before. And what have we done all these previous times? We have built what you call a base and a bottom, right? So you can see this is basically minus 20. All right. So what has happened, I would say 1, 2, 3, 4 times, is we dropped to minus 20 and basically moved out of here. 1981, we did build a bit of a sideways, and eventually we did end up moving out. The most interesting two pieces of price that I really like to watch is in 1987 and 2008. All right. So this is the line for 1987. And you have to understand this is very high time frames, right? This is months. So what did we do? 1987, we built that base, so we had a very steep drop. 1987 drop is very, very similar in terms of how steep it is. So we had a very steep drop, and then we had a slow bleed back to test that drop. And there were certain metrics that showed a divergence, in market breadth metric. It was showing divergence, but we dropped, we tested the low, and then we slowly built another sideways and eventually moved out of there. And 2008, what happened was that we dropped that 20% and built a longer consolidation. It is important to note that the VIX had topped out already, and a lot of people were still betting that we are done. This is it, we were done. And this was the actual flush. We had another 30% after that. Oh, actually, sorry, the VIX in 2008, the VIX topped out over here. All right. And after this, we still had a month and a half of sideways before we made that final flush and reclaimed this level. So this was basically a high time frame Quasimodo reclaim. So you just had to be smart in any market. You cannot absolutely and perfectly guess that this is going to be it. What I would say right now in terms of the market is that the market has priced in everything that is going on right now. All right. Everything that's going on with the virus, the market has priced in. What I feel is the market may not have priced in a potential second wave. Now we don't know enough about this virus right now to know whether a second wave in the winter is coming or not, or when a second wave is coming, or whether or not it will. China maybe knows it, but they are not so friendly towards the rest of the world. So they're not going to tell us what they find. They're not going to tell us about their research and findings. But currently the market has priced in the first wave and everything that we are dealing with right now. So the eventual ramifications of this, and whether we are to continue to be in lockdown, the globe needs further measures, and the virus mutates and certain things happen, all of that has not been priced in. So whether we follow this path or this path, are we here, are we in this zone, this market or better, are we here, or are we here? So whether we follow this path or this path, it remains to be seen. And this is something that we will have to play as the market gives it to us. But this is my perspective on the current scenario, and this is what I think is going on in this market. So here's another metric that last week I had mentioned. It's pretty useful to look at, and basically this is the rate of growth of the cases. And you can see since the last couple of days, I mean, we are slowing down. Since the last few days, we are starting to slow the rate of growth, and I think this is essential. Maybe it has something to do with the summer, maybe it has something to do with just the shape of how an infection spreads. But for now, I think this is something which is important, which will again stabilize the markets for a while, and it is going to give governments something to ponder about, of whether they have to restart their economies, or they have to protect their economies from the next wave. But this is something I told you to keep a look at, and you can see that this is what's going on, guys. Things are kind of stabilizing. You can see Iran is starting to almost improve and move the other way, but the rate has slowed down. In a lot of countries it is slowing down. So the average daily percentage is slowing down, even though you see more and more cases. But when you compare percentages, this is an important metric to keep a look at. And what I would say is it is possible it will stabilize the markets for a while again. And we wait for that retest, guys, and see how the market moves once that. If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!